Celebrating 30 years of phenomenal trend forecasting, 5 times a week, Monday through Friday. Here's Gerald Celente with today's trends in the news.
Hi, this is Gerald Celente. It's Thursday, February 25th, 2016. And here are some of today's trends in the news. Let's start over there in Asia. Woo! Bad day in Shanghai. Way down over 6%. Hang Seng hung lower. Nikkei moved up a little bit. And over there in Europe, on the good news that things are so bad over there in China, markets moved up. And in the United States, down playing low. Once again, just like they had that big recovery yesterday, well, today they didn't recover. They just kept moving up, moving up. Hey, I kept hearing for how long that the markets were tied to China and oil. Oh, that's why the markets went up today, because oil prices went up. They were down, but then they moved up. They moved up on the talk that, well, they're going to get together and talk again, folks. Yeah, them OPEC and non-OPEC members, they're going to discuss in March what to do. That's why the markets went up in the United States. But I kept hearing from all of these experts across the board, hey, it's oil and China, China and oil. The Shanghai index was down nearly 6.5%. It's at 2741. When it started to go down last summer, all the talk was back to 4,500. I guess the China connection broke, huh? Yeah, you know why it broke? Because the markets are nothing more than...
Oh, come on now. That ain't even bullshit. That's horse shit.
That's all it is. It's a rigged game. True price discovery doesn't exist, and they'll make up any kind of story they want for the markets to go up. To wit, U.S. oil prices turned positive late in the session to close higher. Thursday, on the report, OPEC members in Russia had agreed to meet in March to discuss capping crude production at January levels, blah, 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 blah. And U.S. stocks closed higher today, extending the previous day's massive intraday reversal as oil prices rose. But not a peep about China. No. It used to be if China was down, as bad as they are, could you imagine the market fell nearly 6.5% and the European and American markets go up? Of course. So, U.S. stock futures held mostly higher, and here's one of the other reasons. January orders for durable goods jumped 4.9%. Well, that looks good, and that's a reason for it to go up. But how about the rest of the world? Well, don't forget, you don't have to worry about a global recession. Put it out of your mind. Just because we're saying there's a global recession, St. Louis Fed President James Bullard said that he's not too concerned about a global recession. Well, hey, if he's not concerned, and as we said in yesterday's Trend Alert, is the Fed stupid or are they playing stupid? No, not plain stupid, playing stupid. Because if I said are they stupid or plain stupid, that would be the same. So do they really know what's going on? Or are they playing stupid? Because when you look at all the global data, it stinks. Bullard reiterated his opposition to further interest rate hikes. Again, go back yesterday. The Dow Jones Industrial Average reclaimed a 266-point drop, the largest recovery of losses by points since 2008. Oh, yeah, that was a wonderful year, 2008. It's a rigged market. There's no reason for it to go up like this as we see it. And remember, Shanghai went low. The People's Bank of China to inject 340 billion yuan through 7-day reverse repos. China's central bank will inject 340 billion yuan, $52.08 billion, into the money markets through 7-day reverse bond repurchases agreements on Thursday. That was not enough to juice the markets. And they're trying to do it. It's a Ponzi scheme. IMF warns the global economy is highly vulnerable. What are they talking about? Why didn't they listen to Bullard? Bullard knows best. He's a Fed guy. Then, speaking of the IMF, the International Mafia Federation, front page Financial Times, IMF urges top economies to join forces in, you ready? Growth push. Yeah, let's join forces in a growth push. Yeah, push this. The International Monetary Fund has urged world-leading economies to join forces and take bold action in a bid to boost growth, highlighting concerns that global market turbulence is starting to hurt the real economy. You see how they look at the market turbulence, a rigged market hurting the global economy? No. The markets are going down because the global economy stinks. What are you going to do? What's this growth push? More cheap dough? More schemes you're going to invent? Yeah. We invented the other ones, we'll invent new ones. You never heard of quantitative easing before. You never heard of negative interest rates. We're going to put our brains together and keep Ponzi alive. And could you believe this? The United States Treasury Secretary Jack Lew, called for China to do more to boost domestic consumption. And for surplus countries in Europe, such as Germany, to do more fiscal stimulus. Hey, Lew, how about this? Mind your own business. Hey, Lew, mind your own business with your bullshit stimulus crap. Oh, you didn't hear me? Show you how wonderful the stimulus works. It's right here. Poorest areas have missed out on booms of recovery. Study finds, Lew. All this did was help the rich in your market fixes. More stimulus telling China what to do. Who are you? What do you know? What greatness have you achieved that gives you the status of U.S. Treasury Secretary? You don't need any great status. All you have to be is a member of the mob, whether it's Henry Paulson and Rubin with the Goldman Sachs gang, or where you came from. I think this guy was with Citigroup. The nerve of him telling Germany and Europe and China what to do. You got the International Mafia Federation to tell you what to do. What a bunch of clowns. But he said, don't worry. He said, in many cases, Mr. Lew insisted real economies were doing better than markets thought. Yes, they're doing better than markets think. This is not a moment of crisis. Don't expect a crisis response in a non-crisis environment. You know what that is.
Warning, warning, bullshit alert.
And non-crisis environment. Chesapeake to slash spending. Cut up to 69% of its investment plans. This thing goes on and on. The company's operating cash flow dropped 56%. Chesapeake's shares have dropped 86%. This is not a crisis. Stop complaining, Chesapeake. Yeah, pay them dividends. Yeah. Cheap oil, big debts. Small operators are cutting back on expenses to try to contain costs. Moran Oil Enterprises is losing $5 on every one of its 205 barrels it produces every day. And it goes on and on and on, how they're being forced to borrow more money. Forced to borrow more money. Follow the money. It's not a crisis. Indian banks non-performing. In a country where real output is growing at more than 7%, banks should be good investments. Not in India. Over the past year, shares in many state-owned banks have halved. And it goes on and on. It's not a crisis. Follow the money. Follow the banking sector. Yeah. Bank stocks can't escape vicious cycle. Wall Street Journal. Hey, but Lewin Bullard said don't worry about it. Yeah, it's okay. We know best. Bank investors, there is no escaping the doom loop. U.S. bank stocks had another wild ride Wednesday, making an already bad year worse. Okay? The KBW Nasdaq Bank Index, for example, is now down 18% since the start of the year, 8 weeks into it. Bank of America and Citigroup have fallen about 27%. Hey, but how about those numbers on Wall Street? Well, they're not what you think they are, but this won't make the news, so I'll tell you what it is. Earnings not as advertised. There's a big difference between companies' advertised performance in 2015 and actually how they did. How big? With most calendar results now in, FactSet estimates companies in the S&P 500 earned 0.4% more per share in 2015 than the year before. That marks the weakest growth since 2009, while the Great Recession was going on. But look to results reported under generally accepted accounting principles, and S&P earnings per share fell by 12.7%. They're cooking the numbers to make it look as though there's strength. That is the sharpest decline since the financial crisis year of 2008, plus reported earnings were 25% lower than pro forma figures, the widest difference since 2008. There you got it. Some important news that's just getting in and out a little bit. You had Larry Summers. You remember him? The guy under Clinton that helped finalize the death of Glass-Steagall. The brilliant Larry Summers. You're not allowed to say Larry Summers' name without putting brilliant before. Brilliant Larry Summers, Larry's Brilliant Summers, or Larry Summers the Brilliant. Because that's the way the prostitutes like to address him and bow down to him. Well, war on cash. Larry Summers wants to kill the $100 bill. That's right. It's time to go after big money. This is from the Washington Post. Yeah. Because you know what it's going to do? It's going to stop them terrorists and all those dirty deals going on. $100 bill. $100 bill's like a 20 today. Yep. That's what he wants to do. Kill the $100 bill. And over there in Europe, ending 500-pound note opposed. They're trying to end large currencies. But in Frankfurt, some of the people are fighting Brussels. They don't want to end it. Do you know why they're doing this? The death of cash is setting out the trial balloons now. Everything digital will help us stop terrorists. We know where all the money went. Yeah, we'll stop these dirty deals in drugs. That's right. We'll stop that money laundering. That's the line they're going to give us as they make everything digital and do away with as much big cash as they can so they could own every penny that you have, that you could follow every penny that you spent, and they could grab all the taxes they can from us. Don't pay cash. Not with digital. We'll tell you what to do. From robotization to elimination of cash, you can see where the trends are going. This is Gerald Celente, and that's some of today's Trends in the News.